Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go. Well, Bitcoin did not have the retrace down as far as we expected. We did get some potential support structures of this daily level that we have seen marked in the charts at 30,270. We closed the candle out there, ironically enough, and we are starting to make our way back up into this 618 region between the 6.5 618 of this diagonal pitch fan path, mean reversion path to the upside. Pardon my stutter there. So let's go into the high block and check out the liquidity. What is the liquidity? Well, it's when people lock their liquidity into the charts to be burnt to a crisp by the market maker, and we get to see where those crispy characters lie and got burnt to a crisp. Let's check it out. So they previously came back slowly and retraced into this pool of 100x, and then came back into the 50x character and tried to wick back up into the 31,155 region of their partner in crime up here, as well as this 31,197 $236 million pool from here. And they did a bunch of wick whacking and deciding to ping in some more liquidity. It looks like there's more shorts pinged in, which they took out this 100x pool here of shorts.
Fatality.
The 100x need to always consider paying themselves immediately. They do like to come back to those pools. So could be coming up into that 31,197 region for this thick band up here. There is some more bands being pinged in up in the 31,826 region on the 1 minute time frame. You do have stuff that was lost to farther time, which we did talk about at 29,222, that has not yet been forgotten in our minds, but is forgotten to time here on the 1 minute chart. So we need to expand our vision to the external liquidity pools to see where those lie. So let's go to the 7-day time frame and see where those things are. Shout out to everyone here. Yo, 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 what's up? You can hear me clicking. Yeah, I didn't mute my mic. So on the 7-day time frame, looks like we have more shorts to longs imbalance here on the minor external liquidity range of the 7-day. All these guys lost to farther time are now showing up here in these four. We got basically like $30 billion plus just chilling down here, sub 29k. So we were expecting a little bit more of a retrace into these pools. You do have a good chunk down at the 29k region, particularly the 29,450. You have a good $10 billion just chilling there, waiting to be taken. Are we going to go back into that as it stands right now? You also do have this up at 31,750, the narrative split decision at this point on the 7-day time frame within the current price range we are at. You could come up to here or go down to here. Tuesday has essentially gone sideways from Sunday. I was pointing it out to someone earlier. If we go to the monthly time frame, we can check out those pools to expand our vision to that time, and you will see that we have more 30 billion up in the 31.7 region, as well as 32k and beyond, starting to get more shorts to longs up in that region. We are expecting some sort of bounce into the liquidity here at 29.5. You do have that 20 billion or so on the way there on the 1 month time frame. Sorry, my brain's not working right. It is 2 a.m. my time. We were doing some futures trading and got a little bit carried away. So we're going to take a look into the 31 up in the expanding our vision to the 3-month time frame. We do have a lot at that 32 and beyond. So seeing a larger impulse to the upside at some stage is the idea. Is this going to occur today or tomorrow, or are we going to have a slight pullback before we do that? Generally, Tuesday and Wednesday complement one another, so if we are seeing a false move Monday to the downside and then Tuesday slight increase to the upside, then you could see a continuation of that idea tomorrow on Wednesday in terms of the way the 2 days play off of one another. If you look at the current 3-month time frame, you do have that liquidity to suggest going higher. It's a shame we were working at the time to see that cloud bounce, but we'll get into what that would have looked like on Momentum Master if you had it and were visible in the charts. At the 32K region, you do have $97 billion up at 32.1 and also up at 32.785 billion, and beyond also 76 billion up to 33.6 and starts to taper at 33.9, but still a nice $50 billion up in that region. So the liquidity is caked to the upside in terms of a larger play in going to the upside. Said be careful if you are in shorts, because the larger scale idea is coming up to this 32.4 region, $159 billion up in that region, and 139 up at 32.8 and 138 at 33.2. Do we come back into some of these small little pools at 29.6 before we go higher? Who knows? We are a hop, skip, and a jump away from these. If you do stop out some of these 50x, it makes these pools juicier. They aren't going anywhere. It looks like they have them hook, line, and sinker. The 159 billion was ascertained back here on June 18th, so you're not missing any liquidity by coming back even a little bit. So they could keep this on percolation mode while they come back into this to not have to pay these guys as much. Just a thought. And it's the thought that counts. Let's go into the monthly time frame and head into the charts. Shout out to everyone here. Boom, boom, boom. All right, so let's go into the Binance chart. As it stands currently, we're still also, strangely enough, holding the 236 of the trend-based fib extension level to the downside, which is interesting to note. You have also 1, 2, 3 hits to the high. So just putting this out here, you have 1, 2, 3 hits to the high. In terms of this 236 level at 30,764, if you can maintain this, staying below this, then these short ideas are in play, and coming to this idea down here, this little bit of happiness, is what we've been seeing in terms of a liquidity grab of sweeping the lows before going higher. It's what I'd like to see if we were truly going to go up to this 32K region, up in this region here. So in order to come up into this bullish region of the larger time frame structure here, it would be nice to come sweep these lows first and then go up into that region. Just my 2 cents on these fib levels. Let's go ahead and take a throw on the oscillators here. What is this little bit of happiness? Well, this is momentummaster.info, link in the description for more. Scroll down to features and toggle it to see it in its glory at Bitcoin's bottom. Before we knew it was the bottom, and you can look at each component and read about them if you like as we go over. All right, so let's start our journey from the higher time frames down to the lower time frames and make our descent down below. So first, how did we preempt this move? Well, we had this crossover event on the daily time frame. We saw this cloud starting to curve, giving us the preemption of this move to the upside before it happened. This is obviously history now, so we can remove it, but that's what we saw before it happened, and that's why the cloud is a nice little tool when you start to see these crossover events and you start to make reclaiming ideas of the cloud, and the cloud starts to thin, boom, you could see more upside from that point. And daily time frame reversals are also noteworthy on the other side of the equation when you bearishly retest and drop to the downside. So this curvature of the cloud is something to note. This is what we are looking at on the 6 hour here, which is also still maintaining its course for that potential to come lower. We're also seeing the fatigue potential of the daily time frame baseline here. If we close out daily time frames above this, these baselines can start to cross and we could start seeing retraces down into these zones below. Once again, if you can't get above the 30,764 and start closing out candles there, then you could retrace down into this region. All right, let's go ahead and take a look as we go lower. Let's look at the oscillators first. You are overbought on the stochastic. The Williams, as we said, could start coming up closer to itself as it is doing, and similar to how the 22 is behaving. 22 did come up closer to itself and starting to get an alarm cross, and you're resetting some of the 22 stochastic data. So is this going to come down some more? Or start to curve here at the 50 level and start to make its way up for a double top scenario? Same with the alarm. Are you going to see this play out, or play out even in a slight manner here? Even a slight manner would have you at, you know, a 5% drop, so that's not that small by comparison. So are we going to see that start to unfold on the Williams here? You never know. As it stands right now, we do have the cross down event still in play as long as the baselines hold. This candle closes beneath these levels, as we showed with the trend-based fib level here. So the cross down event is still in play for the 22 and the 12. If we take a look, the 12-hour time frame closes in another 6 hours. We're at a spinning top indecision idea here for the 12-hour. We had a previously nice bullish engulfing after a spinning top here, but we're getting another spinning top potential. There's 6 hours on this. This could go either way. Stochastic RSI also coming down. Money flow coming beneath the RSI. Shout out to Rainier, who saw the money flow coming beneath the RSI and put out the bullish divergence idea for that 4-hour cloud bounce before it happened. He had you at hello, so this money flow coming beneath the RSI can give you that preemption of it coming up to push it up higher. So we could see this continue if we are so inclined. The 12-hour cloud is still coming up in a momentous way here. And if we go to the 6-hour time frame, this is what we were seeing with the cloud, although the cloud has now gotten a little boost of volume here. So this is now not in the same manner as we were seeing it. It's still going in a manner to the upside. So we're going to extend that out. That doesn't necessarily have to curve in the way that we were seeing it. In fact, it could even go higher. It is getting slightly thinner than it was, but this also happened here as it started to pull back. The 6-hour time frame closes in 32 minutes. So this candle is a spinning top as of this moment in time. And you're starting to reclaim this with the price action coming beneath the baselines here. So you could be coming up for another leg to the upside here on the 6-hour time frame. The 6-hour stochastic is suggesting that it wants to come up with the money flow here to the RSI. Getting this rejection wick after liquidating some of these longs, these 50x and 100x longs, and then you had that $148 million pool of shorts open up here at 30,936. So they could come up to this guy without hesitation. They pinged in all his brethren up here as well, sprinkled like pepper to make it the ramen taste fresh. So they could come up to that 31,838 region without hesitation, because it is thick right now, thicker than the longs are in this region, although previously down below here it was much thicker. We just lost a lot of minutes to father time, but there are pools down here suggesting that, and we already showed that to you in terms of that on the higher time frame. Okay, so 4-hour time frame. Let's keep our descent going. 4-hour time frame. Also, we previously had put out from our phones at work that this was starting to get a potential bounce off of these levels on the bearish trend-based fib level, and coming back into this region, we're starting to see the clouds start to hold, and around here at 1 p.m. we're saying this cloud is attempting to show support here. We still have yet to get the cross-up confirmation here. In the next 2 hours and 30 minutes, we will see this cross-up event confirm, negating this cross-down event, which was providing suppression for the last few days from this breakout on Saturday. So if we lose that, then this could be coming down. The way in which this cloud is shifting is what we were saying before in regards to that angle, suggesting that the 6-hour also does a similar path. Keltner channel also following that angle on this 4-hour time frame. So if we do see in 2 hours time that this gets sold off in a manner here, then this will open back up and you will start to see a potential of coming down into the cloud. If you do come down into the cloud, then you'll see this kind of bearish retest idea of coming down into the liquidity pools at some stage. If you just compare where we were from Monday 9 a.m. to now, we have essentially gone up, yes, but from 9 a.m. we went up about a percentile. So we've been basically range trading in this region from the 236 down to the 786, from 30,113 up to 30,764, so only about $600 in price action. It's a good 2% range trading idea over the last 2 days. So if we're starting to make these candles not close out in higher highs, then you know what the story is, and coming down to these regions could be in store. This is a premium level. What is premium versus discount? Well, when a car gets more expensive as people buy it, do you want to be buying as it gets more expensive, or do you want to wait for it to come back to a discount? Ideally, you want it to come back to a discount level. The discount level of this impulse range would be down here at 27,289. Although if we go to this 29.4 region and people start opening up shorts and get bearish, that could provide the liquidity for that bounce up into these regions, in my humble opinion. But ideally, a better retrace than that would be ideal to sweep these lows, basically taking out these guys here. So taking out these guys from last week would provide enough liquidity to potentially bring these guys up out beyond this range. It seems right now that this is like a stopping volume to take out the shorts idea, in my humble opinion. If we go to the 1 hour time frame, we're starting to see this cloud shift potential, and also we put that idea out there in the Discord. We were talking about how this could come up, and we saw that it was holding, getting a buyback off of this 0.65 and starting to maintain the baselines and getting this cross up event, and that's when we threw out the idea for that 4 hour cloud bounce idea. As it stands right now, this 236 is still game. We talk about how the 236 is the key for these trend-based fib levels, and these are simply ABC patterns. You have your impulse, your retrace, and your continuation. So if this is going to correct down to this region, this would be where you'd want to see it. And this 236 maps out the path for that impulse if it were to happen. Where have we seen this happen before? Well, let's go back and remind you if you forgot. Let's go see this. So here. Okay. So first you take your trend-based fib extension over in your retracement tools, favorite it, and you do 3 clicks. You have your impulse and your retrace. Okay. So we're going to do that here. We have your impulse first we had it back here, and then we got all this out of there, and then we started to adjust it from here. Impulse, retrace, and the 236 at 29K had you at hello, and then we went down into those regions at the 1 and the 1382 at 24,963 and wicked off that liquidity and bounced out. So these ideas of coming down into these pockets of the 1 to the 1382 are where you start to see these projections of the impulse, retrace, continuation to the downside idea. So this was in the past, so it is gone now, but that's how you do it. And so even on these small little retrace ideas, it's what you see here. You have, you have your impulse and your retrace here, and then that maps out levels, and you have the 236 for your entry model. So if you had taken this as a potential short into this, then you're starting to also see this come back down if you cannot hold this and start to come back into those zones. Now, this is a very ambiguous, precarious point. Does this cloud support us with this cross-up event? Do we start to make our way up from here? Or do the 6 hour cross down is not as powerful as it was back here? So this could be starting to make its ascent in the next 24 minutes for this candle close if it cannot get below this baseline. If we turn to the 12-hour time frame, also you're still seeing this potential suppression, although this is a very subtle time frame that could take days to play out. If you go back to when those things occur, you have sometimes immediate boom and sometimes more fake out precariousness, but eventually when you do have those cross down events, they do occur. So here's one where it took a long time. You had a cross down event and it took a whole 17 days and it did not play out. In fact, it came beneath the price here and did the opposite and started to close out above the cloud, which we were pointing out. We expected a little bit of a stop loss hunt and we missed this long because we were being too frugal with our entry and missed out on this play, but we did talk about that cloud holding, and this would be your ideal entry for a long. Okay, so where we're at right now is not ideal because you're not beneath a cloud. The baselines are above you. So this is why we're not really concerned with looking for a long right now, because you're not in that position for a long. Like here, you had the cross up event holding the cloud, which came up to the consolidation. So if it took 17 days to get there and then we took that up, there's nothing to say that that couldn't happen again. And in the meantime, we did see this occur. So if we go back to this as a familiar point in the charts where we saw a massive move after a retrace, a continuation play, and then we saw the cross down event on the 12-hour. It took some time for this to come up, and then we saw basically, how many days was that? So that was Tuesday. That was basically 8 days, like a week. So it took like a week for us to consolidate around here, and even longer to bring the cloud to a point where the baseline started to come beneath the price like that and thin and give the idea of an expansion. So that's what the cloud represents. The thin cloud represents weakness or consolidation points. Keep in mind, when the cloud thins, a potential expansion or reversal is in. So here's where it banged up from that point. So you basically had the crossover events of the negation of the 12-hour. So the 12-hour doesn't necessarily play out exactly immediately. It can take like a week and some change, but it's there right now as we speak. We have the cross down event, so this could be suppression with the 22 to bring us into a consolidation phase to bring this cloud up to meet us. There's no reason we need to go up from here immediately. This could just be pinging liquidity on both sides, starting to offload, distribute some positions. Okay. After a large play like that to the upside, there could be some players, they could be holding the price to allow the players to offload and build interest before sweeping the lows at some point too. As it stands right now with the long idea, you do have the cloud playing. You got that cloud bounce idea here on the last 2 hours. Wicked off the cloud, bounced off it, as we say. We always say when you break through the cloud, you break through, you come back, you kiss it, and you retest to continue. So are we seeing this continuation idea from the cloud here on BTC? Let's go back into the liquidity, see what's going on the 1 minute. We're going to keep this short but sweet. I got to get some rest. My eyes are dry from staring at the screen for like hours on end. So, yeah, this 100x pool up at 30,725. Not that far away. They could come back to grab that little bit of happiness. 52 million with, what is that? Let's zoom in. So they have 52 and 42 million dollars up there, just a hop, skip, and a jump away that they could slurp up right now without thinking twice. And they could be going up to that 148 million, depends on how much they ping in. As they broke out here, they got a bunch of longs interested, so they just came back for the longs. But as they came back for the longs, more shorts opened. So they're always caught between rocks and hard places as these interest spots open up, and then the imbalance to the shorts to the longs was what caused them to come back into this 100x here. So it all depends on what they're pinging in right now. The hourly cross down event could be in play if you start to close out the candle in the next 19 minutes in this bearish state. Once again, you have to hold the 236 30,764 for a bearish sentiment to be true. Beyond 30,764, you could be seeing more upside into the 31,393 range and beyond. So as it stands right now, you're at even Steven points, not overbought, not oversold. You see 2 time frames overbought, 2 time frames oversold. You're just in this middle consolidation range. It could be similar to what we just illustrated, which took a week and some change, 17 days to play out back here in February, or Tuesday, March 21st or whatever. So it could take that amount of time from here to here, 19 days or something, to actually see a continuation to that 32K region. It doesn't always need to occur immediately. We could just be pinging this range for a few more days, even this entire week. Looks like the NASDAQ is doing that as well. We'll go into the we're going to go into the dollar and see what happened with that. So the dollar did break down where we had it at here and started to come down into here. But the idea of coming down and resetting some stochastic values, you now have the daily, the 3-day, the weekly, the 4-hour, all these things in an idea for a long with the cross up event on the hourly. Let's go see if we have some higher time frame ideas like that. The 12-hour is crossed up from back here in June 20th, and we could be seeing a double bottom event for that bounce out of here. We did illustrate that region on the bearish trend based fib level up into this region of the 706 for at least a projection to that zone. Let's go adjust that bullish trend based fib level because that's no longer valid, as it did come lower here. So for the bullish one, you have to make it above the 102.626 level, and then that would start putting you up upwards in resistance points in the 103.311 and 103.211 regions. So you could be having a shoulder, head, and possible shoulder for the DXY to come out of here at some stage. The NQ had some breakthrough that fib level, breaking completely back up out of this range. You're seeing a play in the open. Nasdaq also respects levels here. You see, here's an example of open bouncing off of the 618, not once, not twice, but 3 times, where it bounced, and bounced off of those fib levels. So finding those as confluence zones and coming back into fair value gaps and everything does play a thing on the Nasdaq, and as you see by the volatility, this can pay the bills if you are good at risk management. Links in the description for funded information. Also within the Momentum Master Discord, a lot of people take these on subatomic time frames like the 30-second and below. Let's go ahead and go back to Bitcoin and see what's going on. So we already pointed out the levels. This could be your third hit to the high, or you could break beyond, and this could be your rise, retrace, continuation. It all depends on this level of the 236 at 30,764. So it all depends on this. If you start to break beneath this level, then coming down into these nether regions could ensue. If you hold above that level, then going up into these upwards paths could ensue, but it could also just be a big range trading week. You never know. Protect yourself at all times and enjoy and have a nice week in trading. Now we are entering Wednesday. We're currently at a crossroads, as I stated on the 4-hour. 4-hour closes in 2 hours and 14 minutes. Please check on that. I will not be around I'll be sleeping, as it'll be 4 a.m. my time. So daily candle close should bring with it some interesting price action in either direction based on these levels and the cross up event that could occur. I think it will occur based on just, unless there's a sell-off immediately, it will basically by the next candle close should bring a cross up event and could bring this continuation to fruition. On the monthly time frame and above, you do have that 32K region to note. So we'll just reiterate that and then bid you adieu. You do have that 32.4 region with looking juicy on the 2-year time frame. Just remember, external liquidity range 32.4, 32.8. You got $260 billion up there. So eventually we would come back into those regions. Is it us going to sweep the lows before we do that? That is the question. Personally, I'd like to see it sweep the lows before we go long, but that's just me. So, and that's my story, and I'm sticking to it. Once again, thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, bringing the fire, the precision, the accuracy, and all that fun stuff, and we will catch you on the flip side.